Wanted to cover some precious metals thoughts, and this is as much from me as you because I just want to think out loud, as it were, about these charts. Because as I've said repeatedly, I do think silver represents a really wonderful multi-month long opportunity, but it's be a little more pleasant at the right price. And the challenge is to know if the right price is basically already here, or if we should wait for some sort of post-election beatdown to get a better, safer price. So let's just thumb through a few charts to talk about that. Here is the past 4 years of the silver continuous contract. As you can see, we've got a very well-formed base here. And it's been a pretty sloppy breakout since then. So we broke out, retraced, broke out even higher and retraced, and then broke it even higher, with plenty of wiggles and waggles along the way. And most recently, we have eased back from about 34.84 down to 33.25. These aren't huge nominal changes, but we're dealing with a $33 object here, so $1 is a decently big deal. On the one hand, I don't want to rush in, especially with such a huge binary event coming up. On the other hand, I don't want to miss out on the big move. Now I don't know if we will ever see a big move like what we had in the Hunt Brother days, because once it based and began to move, there was very little in the way of opportunity to get in. And what became particularly comic was these limit up days. It was just incredible. Just limit up every single day, just trading basically ground to a halt. And then of course the inverse of that, limit down days. So you can imagine the agony of those who were long these contracts and literally could not get out. It was mark to market every day with a new limit down, no trading at all. And then finally, after a 70% wipeout, then people could start finding bidders again. Nasty stuff. Anyway, so we had that sort of phenomena here. We had it also here, although it took a while longer to play out, but it was still just as dramatic. And we may well be beginning that sort of thing here. Now, as I mentioned, the main hesitance, if I can coin a phrase, is how quickly gold has moved up. Gold has moved $1,000 in a year. So October 2023, it was $1,800. October 2024, it was $2,800. That makes almost every other asset pale in comparison. So there's been not much in the way of backing and filling during that time. There have been instances where it sort of stalled out for a while. It stalled for months here back in May and June. But what I don't want to see is some shocker next week and just pounding gold. And I think if it got pounded, we're only talking maybe to 2650. I'm not talking about going back to 1800, but some modest diminishment of say $100. And it would be most appealing to get silver at a better price. But like I say, we might not even get that chance. That's what I'm wringing my hands about. Very broadly, as we look at the pairs charts, those, and I've shared those many times, those basically speak to the idea that precious metals are going to vastly outperform stocks, and that stocks are really overvalued. So all the ratio charts reach the same conclusion, which is, long precious metals, short stocks is the pair trade. And another twist on this, and another thing that's important to keep an eye on, is the gold-silver ratio. And gold, the gold-silver ratio has been stalling out itself for years at this point. And what I've been reading, I'm not sure how much stock to put in this, is that a failure on this, and this makes a certain amount of sense, a failure on this would be a pretty strong signal that silver is putting on its running shoes and going to catch up. Because as you plainly saw, gold has been a tremendous performer and silver has been a real laggard. Relatively speaking, they've been pretty much in sync. But the cold fact of the matter is that gold is, at dramatic lifetime highs, whereas silver is not. Gold went up $1,000 in the past year, and silver, if you compare it to, say, what was its peak back here in 13 years ago, we are a good 35% or so under that price. So that's kind of the importance of the ratio chart. Let's just close with a couple of specific silver items here. As far as SLV goes, which is the most popular way to trade silver, we've got a couple of inverted head and shoulders going. One of them is here. So we got shoulder, head, shoulder, neckline, breakout, retrace, and then a very sloppy move higher. Then we've got a miniature and frankly cleaner one here. Shoulder, head, shoulder, breakout, and retrace. Now, 29.20 is the gap. That may well be a great price to get in, and who knows, on Monday I may not be able to help myself. I might establish a small to medium-sized position just in case, because this does seem a perfectly sensible place for it to seal the gap and represent an appealing risk-reward ratio. But it could, if it cracks that, if it gets below this, we've got this very messy area here to deal with, and I really don't have any good belief as to how far it would fall in that instance. And PSLV, obviously a very similar setup. Here's the inverted head and shoulder. Here's the miniature version right here. And in this instance, the gap is right like so, 10.82, which is all of 16 cents away. And that may also represent a good point to get in. If it is, then the target price is way up here, which is about, over 50% away, which is tremendous. So I'm sort of talking myself into it even as I'm recording this. Monday's going to be very, very key to watch on this. In a way, I'm hoping it busts through these gaps to sort of excuse me from even making the decision, because then it becomes not a good idea. What's tricky is that then I won't know really how far will it go, because this is the place it should stop, truly. So, all right, that seems a good place to wrap up. And we will kind of check in on Monday and Tuesday and kind of see how things are going then.